Hello, it is Wednesday, September 5th, 2007. This is Brian Shannon speaking from Alpha Trends. You can see here we're starting out with a 2-day, 2-minute chart of these spiders. They did finish with a loss of $1.58, or just a little bit more than 1%. And the late day sell-off that I pointed out yesterday, which did occur on increasing volume, I guess did foreshadow a terrible open for today, and the market then remained weak for the remainder of the day. It did stabilize a little bit and try and rally at the end of the day, but you can see that didn't hold. It did close below its one-day VWAP, and if we take a look at the average price of the last 2 days, you're going to see that the average price was right about 148.15. That's important to point out because when you look at the daily chart, yesterday you saw light volume. Today the volume picked up a little bit as the market sold off in here. So still not convincing action that the market's just not going to make it that easy to buy a break above a neckline and think that you can see the market run right up to its target of 157. Unfortunately, that's the way a lot of amateurs trade. Yesterday I had said that no matter what one day's activity does in the market, you have to maintain your discipline. This market had 4 real nice days of upward movement, and today it saw a little bit of a pullback. It maintains above that declining neckline, so maybe that will continue to hold as support. However, it can continue lower along that support level. So still kind of mixed pictures. On the intraday time frame, the intermediate term, you can see that we do have a rising 5-day moving average, and the market came down and tagged that intraday. Now I think if it can get back above that 148 level that I thought was going to be support for today, if it can get back above that level, the 148 level, then maybe this is going to prove to be just a short-lived pullback. We could look at Fibonacci and take a look and see how much of this move has retraced. And so far we're coming down not quite to the 50% or the 30, so about 42%, I guess. So that's not really telling us much of anything in here, although it did close above the 38% retracement of the most recent leg higher, which began right here off that low to the highs from yesterday. So still a shallow pullback, but on the daily time frame we've got mixed picture here. So I'm going to continue to stick with the theme of go slow. It's a volatile market in here, but it's showing signs of potentially turning. It's not going to occur all at once. Take a look again on my blog at those charts from 2005, 2006, where we had those inverted head and shoulders patterns. Taking a look next at the semiconductors. Semiconductors yesterday, I said that they were clearly extended based on the action in the 10-minute time frame here, and this is where we had seen the really heavier volume sell-off was in the semiconductors at the end of the day yesterday. Again, that foreshadowed also weakness for today. The market is still above a rising 5-day moving average. And as far as support goes, it looks like, I was thinking maybe the 50-day moving average. That's about where we are right now. That's at 38.30 or so. I think you can see it pull back deeper. Keep an eye on that 5-day moving average in about 30. Well, what was this high here? This looks like an important level is about 37.70 or so. But right now, it's short term. It's in a downtrend. Intermediate term in an uptrend. Longer term, kind of neutral. So really a mixed picture for the semiconductors. We're not going to be able to see much in the way of leadership out of them here in the near term. The IWM yesterday looked like it was breaking past the recent highs, these recent tops in here. But breakouts from extended moves tend to not hold. And what I mean by that is this market already ran from 77 to get up to that 80 level. So it expended a lot of upward energy getting to that level. It poked through it briefly yesterday, but was rejected at the declining 50-day moving average, which is now about to cross down through that 200-day moving average. That'll get a lot of people's attention, but again, it's much longer term of a signal than we would be interested in as shorter term traders. What it really means on the weekly time frame is you would expect more consolidation in this level, and perhaps it could lead to a more severe breakdown, but the evidence isn't there yet. As long as it maintains above this low right here at about 76.25, then we're going to look at this market. The way I want to look at it is a higher low, and it keeps hammering away, trying to push through that resistance level. And I was in here, I was thinking maybe 79.25 would be support. It came a little bit below that, but it did find support along the rising 5-day moving average, so somewhat encouraging. I think we need it back above 79.50, 79.75 or so before we can really put much faith in the potential for a turnaround. Another test that might eventually lead to the break past that 80-20 level that can actually hold. So let's call that 80-30 now. But we're going to need, this is good for the market if it can hold on. If it can't hold above probably 78.35, then we may go down and test this level. But this is making what might be an ascending triangle in here. If you take a look at these, higher lows, and then the resistance up to this level, it just shows that buyers are getting more aggressive price-wise here on this intraday time frame. They're not waiting for pullbacks to 74 before the buyers take control. Instead, they took control at 76.5. And hopefully they can take control around 78.25 or so. And the supply-demand, the demand is getting greater at lower levels. Hopefully it can work through that source of supply up at $80.30, and then the supply can take over, or the demand can take over the supply, and maybe we get a nice little squeeze in here, but still have to be overall careful because of that declining 50-day moving average. It's still a difficult market. It's a trader's market. A trader's job is never done. The job is risk management. It's not about loading up. It is at certain times, but if you're going to load up, like Rockefeller says, put all your eggs in one basket and watch that basket very, very carefully. Now is not the time to do that. The odds just don't favor because of the overall mixed picture for the markets. The Nasdaq remains in much better shape, and we are getting a little bit of a pullback in here. Like I said yesterday, I'd like to see a pullback maybe down towards the 50-day moving average. That would bring it all the way down to about 48.20 or so. So still almost another dollar lower as far as what I think it could be a healthy pullback. And on the shorter term time frame, or you see that we've still got a rising 5-day moving average, so odds don't even favor the pullback there. Maybe that's a 48.5, 48.60 level will hold the support. It's tough to say. Tomorrow looks like it might be more of a slightly down to consolidative day, so just continue to be very careful and maintain your discipline.